Hi, this is Bill Wood with Disciplined Trading Decisions. I'm creating some videos on trading bottoms. And so when this market started to break out to the downside, it actually had several legs already down to the downside. I figured that I would just hit the record button and see if there was a trading opportunity here. Now, this is the 30-minute chart. This is a 4 range chart. This is a 2-minute chart, and this is a 5-minute chart. And you can see that it had been coming down for a while. This is 9 o'clock in the morning here, so this is just about 10 o'clock in the morning. And this red line here is the previous day's low. So you can see that it had went through the previous day's low. Okay, I'm going to start this video, and it's at 400 times speed. You can see that it's crashing down, and sometimes you think, you get that anxiety feeling, oh, it can't go any further, and you want to jump in. And I'm trying to have little or no emotion in my trading. So I just have a rule that I'm not going to try to catch these bottoms here. So what I plan to do, if I think that this is a bottom here, I have this previous day's low here, and I have this trend line up here, I'm going to wait for a pullback. That's just going to be my that's just the way I'm going to trade bottoms. And so if I had believed that this was going to go lower, this may have been an area up here, a lean off of this area to actually go short. But when I saw this, I just clicked the record video to see if there's an opportunity to show how to trade bottoms. So if this truly is a bottom, I'm going to wait for it to pull back. If it just takes off from here, guess what? I miss it. All right, and that's okay. I'm not going to get anxious about it. I'm not going to try to catch a falling knife. So we're going to watch this, and so this would be an area where I would be interested in getting long. Let me just stop this here. And what I'm looking for. Okay, first thing that I noticed, as this is coming down, you have this liquidity here. And you got pretty nice, see that ball there is mainly red. So what that means is that they were trying to sell into it, and somebody was holding up the market there. Once it got through that level, it was all red. That means they were pushing it down. Then this is where the previous day's low was, so there's a bit of a battle there. Went just a little bit lower and took off. You can see that there was liquidity here, and that may have been after this blue. It's hard to see that there, after this blue ball. So we went up, and I would really like for it to come down to this blue ball here, 53.54. I think there's 168 contracts waiting there right now. That would be a decent low risk trade. I know what my risk is. I'm not. I would let it go. I would let it go to a new low, and that would be it. Now, I think it stops here. You can see that there's some liquidity right here. I think it stops here, and I have to decide whether I'm going to jump on in here and maybe put my stop, below this here, down maybe around 50. But it comes down, and the one thing that I'm concerned is, will it be able to get back over the 60 level? So that's what you're going to be seeing here. So I didn't have my microphone on, but that I'm looking at liquidity there. Oh, that wasn't. This is liquidity here, and it's the same level as here. So that's 60. I'm going to be watching that, and I was hoping that it could get down to like 52, 53, and we'll just watch it here and see what it does. So I don't want to chase it. So I'm comfortable, 60, 61. And I would be fine with my stop down here around 50. I thought there that it might have that little second push down to 53. Wasn't having it. So I got 4 contracts on, and it started going up before I didn't really have a whole lot of heat with that. So I wasn't in love with this trade. I wasn't sure that we could get out of this minutia here. So I just put my first set of trades right up here just to remove my risk. So I got 2 contracts here, 4 contracts here. So once these 2 contracts go off, I'm risk free. So now it takes me out at 777. I have 1 contract left. I would like to be out here at 87. We have this volume edge up here, but it just kind of stalled out. And if you look at my 5-minute chart, you can see that there's just a lot of junk up in here. I think this is the mid of yesterday, right there at 81. And so I'm looking at this liquidity here. If it can chew through that liquidity, I'm out probably 72 to 71. Otherwise, I might put my stop below that. Again, I'm looking at 87. If it could take off like a rocket, then that's why I don't have my trade up there right now. But at this point, I'm actually happy with 75. So I'm going to put one up at 87, and I don't think that it actually made it up to 87. So what I started doing is squeezing the trade, and that's where the closer it gets to my target, the closer I get to the prices, and just squeeze the trade out. Again, that's to take emotion out of the trading. If it gets within a couple of ticks of my target and then starts backing off, I don't want to feel those emotions. So I just squeeze out the last couple of ticks. Got 473 on that trade, little reversal trade. That was 4 contracts though. If I was trading 1 contract, I may have tried to make it up to the 81, yesterday's mid. It was just off of the point of control, so I would probably try to get out at 79. If I had 2 contracts, I would have done the same thing, where I would take off my risk as fast as possible, and then just have a target. So this was just an example of me trading a bottom or a reversal. This is Bill Wood with Disciplined Trading Decisions, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out some of the other resources that we have. Thanks, and have a great trading day.